Now, in financial news, Korea's stock market has been losing momentum in recent weeks, with the benchmark KOSPI fluctuating by the smallest margin ever over the first 6 months of this year. Hwang Ji-hye has this report.
It's as if the Korean stock market has had its pause button pushed. The Korea Exchange says the nation's benchmark KOSPI is losing its vitality, with market volatility in the first half of the year hitting a mere 0.6, its lowest point since 1990 when the market first opened. The closer the index is to zero, the more stagnant the market. The figure was at over 2 in the second half of 2011, but has continued on a downward trend ever since. And it's not just the dynamism, but also the number of transactions that remains subdued. The average daily transactions volume on the nation's main bourse came in at around 23 million in the first half of this year, marking the lowest level in 7.5 years. Analysts attribute the lackluster performance over the past 3 years to sluggish domestic demand and the slowing Chinese economy.
Korea is heavily dependent on exports to China. The nation's industries are also closely linked to those in China, so the slumping economy there had a major impact on the economy here.
Analysts add that the recent strength in the local currency trend has eroded the profitability of local companies and is keeping the stock market from perking up, but they also forecast better conditions in the second half. They say the global economy, more importantly the U.S. economy, is on a rebound trend, which will result in more robust exports for Korea, eventually raise local corporate profitability and put some pep in the stock market's step. Hwang Ji-hye, Arirang News.